Hi, this is Matthew Cratter from Trader University, and today I want to talk about this news item, whether Tesla's biggest bear, biggest short seller, has become a bull. Someone just sent me this video yesterday from the YouTube channel Financial Education. This guy's been a big Tesla bull, and unfortunately he doesn't really know what he's talking about. In this video he's talking about the news that he saw that Jim Chanos had been buying call options on Tesla. Now, Jim Chanos is a billionaire. He was very famous for predicting the collapse of Enron, and he's been a Tesla bear for many years. A very smart guy, and so there have been a couple articles on this where talking about Jim Chanos hedging his position. So Jim Chanos is, according to the filings, he's short Tesla stock, and there's a bunch of speculation because they just had a filing and said that he had bought $420,000 in reference to the 420 price. I guess it's the cannabis joke, and the price at which Musk was saying that he was going to take Tesla private. But anyway, he bought, according to this filing, according to this article, Jim Chanos bought call options to somewhat hedge his short stock position. And so there was a lot of news about this, and just crazy comments in here. Jim Chanos only makes money once every 10 years. The rest of the time he bleeds money, etc., etc. So I looked into it. It turns out that it was actually just a misfiling, and I haven't seen any of these channels issue a correction because they're sort of perma bulls. But he was actually long put options, as we would expect. There's a big misconception about Jim Chanos. I actually know him personally. I had lunch with him a couple years ago, and so you'll see articles that are often cited that he makes money once a decade. This Chamath Palihapitiya doesn't actually know what he's talking about, unfortunately. The way Jim Chanos' hedge fund works is that he gets paid based on the difference between what the S&P is up versus what his hedge fund is down. So let's just say that, for the purposes of this argument, let's say that the S&P 500 is up 10% on the year. And then Jim Chanos and his fund, he's only short stocks. Let's say that he loses 8% in that year, because basically in a very strong bull market, all stocks will go up, even fraudulent stocks like Tesla. Well, Jim Chanos gets paid on the difference between these two things. So if he's down less than the S&P is up, he gets paid. Now, the reason for this is if someone just wanted to hedge their S&P risk, they could short S&P 500 futures. But what Chanos does, he provides a real service here. He has a fund which, he could be up 8% when the market's up 8%, even being mostly short, in which case he's basically outperforming a short version of the market by 18%. So the problem with this channel, Financial Education, its commentators, they just don't know what they're talking about. Jim Chanos only makes money once every 10 years. The rest of the time he bleeds money. These people don't understand how this hedge fund compensation structure works. And this Chamath, who is on CNBC, also doesn't know what he's talking about. And he's massively long Tesla. He's been a big Tesla bull, so that kind of shows he loses a lot of credibility in my mind. Further Tesla news, just to give you an update, Tesla is now charging for black paint. Their margins are so thin or negative that they now need to, no one really wants a white Tesla. So your Tesla just got $1,000 more expensive. And this is just really more evidence of the cash crunch, the ongoing cash crunch at Tesla. And this is finally catching stock analysts' attention as well. So today, Goldman Sachs analyst David Tamberrino, who was a bull on Tesla for a while, has cut his price target on Tesla to $158. It was at $200. And he said that he just doesn't think that demand is there. So be careful when you see these headlines about bears turning bulls. Jim Chanos is he's a very smart guy. You don't want to bet against him. These guys who are saying he's a loser and doesn't make any money, the guy's worth $1.5 billion. Definitely a smart guy to watch. And he's massively short Tesla as well. I continue to own the January 2020 50 strike puts, and you can see You can see the underperformance we're really having in Tesla here. The stock market, the S&P 500, is hitting new all-time highs. It's up almost 1%. Tesla's down on the day. And what's really been happening with Tesla, as we talked about a little bit, it's had a massive short squeeze and is now really struggling at the 50-day moving average. So I think this is a great time to add to short positions. You can see here, declining 50-day moving average, stock trading below the 50-day moving average, 50-day moving average below the 200-day moving average. And this is in a very strong bull market. So you can see the failure here 2 days ago, 3 days ago, where Tesla tried to trade above the 50-day moving average. And you got this sort of bearish long wick candlestick as it failed. And now it's sort of bumping up against the 50-day moving average. And again, this isn't a very strong bull market. And so I really can't understand why anyone would want to own this. There are all these stocks that I talked about in my previous video, Zscaler, Okta, all these great enterprise software companies that are hitting new highs. And so I think the Tesla bulls, to be frank, most of them don't know how to read a financial statement and don't really know what they're talking about. And they put out these articles just for the clickbait. Well, thanks for listening. And if you want more updates on Tesla or the stocks that I'm trading, please subscribe to this video. And if you have any questions, leave them in the comments below. Thanks a lot for listening. I'll see you in the next video.